And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Thursday, August the 19th. Thanks for trusting. As always, we're going to be looking for accurate context. Sorry about that. My name is John Hoagland. Here I am again. And again, thanks for trusting me with your time. We've got a lot going on in these markets this morning. There's a lots of volatility coming back into the markets. Obviously, things are moving. Hopefully, things are headed your way already. May always be thinking about the three that we talk about every day: accurate context, good risk management, and patience. I find that when volatility comes into the marketplace, it kind of pushes people into being more reactive, more emotional, of course. But in my experience, it's paid to be a lot more patient and look for good trade locations. Let the market come to you and tell you when it's time to act. We've got the jobless claims out this morning. Initial jobless claims were lower, that's for sure. Continuing jobless claims higher, and both of them were actually revised higher from last week. So some, questionable kind of divergent news there as well. Philly Fed came out much lower than expected. They were looking for 223. They came out 19.4, so lower than expected. We're still looking for leading indicators at 9 o'clock Central this morning, as well as the nat gas numbers due out at 9:30. If we're looking at our charts, we're well aware that the world and U.S. equity markets are probably facing further losses today after the FOMC minutes reiterated the Fed's aim to taper its asset purchases sooner than we were expecting. Demand concerns now some economic uncertainties drive crude prices to levels we haven't seen since last May. And good earnings continue in the retail sector. A little bit of a good news there. Kohl's, Macy's, and BJ's Wholesale Club all beat earnings and revenue, and we're looking for, after the close today on the retail side, again, Ross Stores is due out after the close. That's a $44 billion market cap company. It's a pretty big company. VIX up 10% this morning, 23.74 as we would expect. Dollar index up 93.36, and the 10-year yield kind of hanging back around that 1.25 level, 1.24%. Bitcoin steady. I find that strange when there's a risk-off type of situation like we may be facing in the equities. The stores of value, gold kind of holding against the high of a channel we're going to look at very shortly here. And, there's a potentially a lot of opportunity today. Just be patient and creative. It's going to be one of those days, and we look forward to these days. We all look forward to a little volatility. We have bigger potential profits, but we also have bigger potential losses as well. Just keep that in mind. Ed Nelson, first in the room. You win the prize this morning. Brett, good morning. Have a blessed day. Of course, Ed Nelson, we hope that for everyone. Brett stayed patient this morning, was able to profit 3 times what he lost yesterday, making progress. That's great news, Brett. Keep up the good work. Theo, good to see you as always. Ricardo, good to see you. Saw you yesterday in the group coaching. And by the way, if you went to group coaching, hopefully you found something you were able to bring along with you to improve your performance, of course. Jorg, best trader community in the world. Absolutely. Kevin, Daniel, Rob T, Brian, Bill Phillips, good morning. Malachi, good morning. I see a couple of maybe new names here. Welcome to the Market Forecast. Glad you're here. James, good morning. Ryan, Tone, Will Doherty, good morning. Zerain, Charles, Jim, George, Janus, good morning. Monday graduated to step 2, back in business today, looking for green P&L, everyone. Congratulations on moving on to step 2. We're always happy to see people succeeding. Fred Decker, good morning. Thank you for the group coaching yesterday. My pleasure, Fred. I always love your questions. You always come up with really good questions and challenging questions at that. I really appreciate that. Jerry is awake, so hopefully so is John. Stacking bananas. Stack some bananas today. Fred, Prophet Eon, good to see you. Januz, Greg H., Jason Cargill, Daniel, Rick, my brother, good to see you. Joseph, the future scalper, good morning to all, and good morning to you, Joseph. Nelson, Laura, good morning, good to see you as always. John, BK, and Malachi, good morning from Alaska. Wow, Alaska. Probably everybody says that. You probably get that a lot. Wow, you're in Alaska? Wow. Is it cold? Which it very well might be. All right, so there's a lot to talk about today. We've got the crude oil just opening up, really not responding too much. Can't tell if the opening range is the low of the session, but we are opening with a gap. Let me get the daily up here so we can get started on our charts. Get things set up a little bit here, and off we go. All right. Let me get my notes. Fundamental fear of lack of demand is certainly meeting economic uncertainty. We've broken out 2 days ago below our weekly kickoff level. Last week's low, we are now below that. There's plenty of space down below for this market. We are going to be opening with a gap. Our theory of a potential pennant formation has now been broken. I'm looking at this as a medium time frame market state to the downside, and I think there's plenty of space for us to continue if that is what we are going to do. These lows here from back in May look like good kind of swing lows for this market to eyeball and to target. And we talk about this when traders are looking at a level, they tend to make that level come true. So we're looking at 62.65. Nope. 60.68 is that swing low. And, not saying it's going to happen, but the space is available for us to get there. Take a look at the 30-minute chart. So when we accepted yesterday below weekly kickoff low here, 66.80, we drove pretty much straight down for the better part of the day. We had the EIA come out with a 3.1 million barrel draw in crude oil, and we went the opposite direction. Obviously, there's more to price than supply. It's demand. Demand continues to be the issue, and with continuing economic uncertainties, the price has continued to move lower. Settlement, 65.21. All of our overnight short time frame weaker hands traders are short. You can see they're starting to get a little bit nervous and taking price back towards the gap and towards settlement. But if we can't close the gap relatively early, I'm going to still be looking for opportunities to look for good places to manage risk on the short side. I'm looking to sell strength in this market as long as we cannot close the gap. And, sometimes even the gap is a pretty decent, the previous day's low can be a pretty interesting area for some fish to be hanging out there. But I'm not looking, this is a pretty good, pretty substantial gap. It is possible for all of these overnight shorts to push price much higher towards the gap, but with the current state and the way things are looking, again, I'm going to be kind of hawking here, watching for some potential structure with which to lean on. our little consolidation here in the overnight could end up being that structure. It would allow our overnight shorts to get out, which does bring does take buying power away from the market. We've had some pretty decent opportunities off of the 50 or the 20 session exponential moving average. And it looks as though we've maybe left the opening range at the low of this session, and that would be somewhat typical, opening out of range and out of value, and with a very deep overnight short position. But I'm looking at this thinking, okay, this is probably more of an opportunity for us to get a better trade location for shorts than it might be for the longs. We don't know this, of course. Anything can and will happen. But when we have gap rules, we try and look for opportunities as long as the gap isn't closed early in the direction of the gap, which has us looking to the downside. It's going to be an interesting trading day. We're going to have to watch and see how this thing plays out here in crude oil. We've got the E-mini S&Ps. Now, something kind of interesting here that's not something that we usually talk about on the market forecast. The potential market state break, looking at the daily chart here, we've traded straight to weekly kickoff low yesterday. We are currently trading below it. That's a kind of a stage one market state break. If we continue to push to the downside and we start to accept below this 50 session exponential moving average down here, then I think it's a pretty good possibility of a continuation or a 5% correction in price. We've been talking about the fact that the market has been struggling to move to the upside. Now it's got a little bit of bad news. When there's no bad news, it just grinds to the upside. So we look and we pointed this out as the day it happened. We have a bearish engulfing pattern. We've had a lot of them. They don't tend to last that long. But now we're finally to a kind of a level where this may start to look like a different market state. I mean, we've known forever that this has been an upside market state. If we continue this push to the downside, that may change it to something a little bit more rotational in a longer time frame, or to a push back down to lower levels. History tells us when the market corrects or adjusts this way, it's usually every time until the next time if it doesn't happen, it's always been a buying opportunity. So if you've got some cash, be patient, look for some potential opportunities in the coming days, perhaps even weeks, to look for some buying opportunities. Everybody right now is all hot on, okay, well, the quantitative easing is going to end. What's that going to do? What's that going to do? Well, we don't know when, we don't know how, we don't, and the Fed is probably not going to be doing anything to try and knock the stock market off its pedestal in any substantial way. All right, enough about that. From this low to this low was 21 trading days. From this day on the way back up to our bearish engulfing pattern was exactly 21 days. I found that to be interesting. Market timing sometimes is a thing. Take a look at the 30-minute chart. So already we have some overnight inventory to the short side. I guess I failed to put the settlement price on here. I'm going to just put it on here real quick. 43.94 and a half. 43.94 and a half. All right, close enough for rock and roll. We have a late spike yesterday. Now, we've been talking a lot about late spikes to the upside. The late spike is a change in the perception of value that does not have time to give acceptance in the day time frame. It happens too late. When we open inside the late spike or below the late spike, it indicates acceptance of lower price. We have settlement right here, again, 43.95 half. and we have some overnight inventory that's holding short to the short side. They're already perhaps getting a little bit nervous. So if we're looking to sell strength in this market, the short time frame shorts might be creating our opportunity to do just that. However, there is the possibility, and it is a distinct, it's always a distinct possibility that, the price could move all the way back to the base of the late spike, and it would still be representing a bearish tone, if that's a thing, a bearish tone. It doesn't break the downside structure here until there's acceptance back above the base of the late spike, which would put us back into value from yesterday before this whole late spike hit. That would put us back up here, and we would need to spend some time, find some volume up there for it to reaccept inside value from yesterday. So I'm going to be watching, I'm going to be hawking, I'm going to be stalking, I'm going to be waiting to see if this market gives us an opportunity to look for shorts against an inflection level or something that I can lean on to limit risk. We still have our weekly kickoff low right here. When this market drove right to it yesterday. There's a visual up here in the point of control. There's lots of visuals down below for traders to kind of fixate on and for opportunities to trade to. So watch that opening range trade. The opening range trade has a higher probability of coming true because we're opening out of value. We're opening out of balance. And I'll be watching that, of course. And, I'm going to be looking for opportunities to perhaps sell strength because this nuance, this late spike nuance is a pretty high probability trade. I'll be watching. I'm sure everybody will. Even if you don't look at even if you don't trade it, there's something to learn from there. And there was a request to take a look at the TPO in the YM. I don't have that up right now, but we can take a look at the 30-minute chart here in the Dow. Okay, that's the late spike. It's the same situation as in the S&Ps in large part. So here's regular trading hours yesterday. Here's the late spike. The base of the late spike is all the way up here. Settlement is here. We've got a lot of overnight shorts that are kind of unraveling in the same manner as in the S&Ps. But, when we open regular trading hours inside or below the late spike, it's an indication that lower pricing is being accepted. In that regard, I'm going to be looking for opportunities to sell strength. Okay. Here's the Nasdaq. Nasdaq wrestled to weekly kickoff low, wrestling with weekly kickoff low right now. That's going to be somewhat pivotal for us today. Again, we're looking at a potential market state change upon acceptance below the weekly kickoff low and this 50-session exponential moving average. That's the next step. Look how it traded right to it last night. The 30-minute chart is going to tell us what? And again, I failed to put on settlement. I'm going to put that on. Settlement is 14,849 and a quarter. And that's going to be about close enough for me for rock and roll here. There we go. So again, we have the late spike situation. We have an important inflection level in play today. We have overnight shorts. So there's going to be some conflicting information, probably some cognitive dissonance going on. But if you stay patient, if you just stay in the weeds long enough for the opportunity to sell strength here, it's what the late spike is telling us. It's telling us when we open below or in it, there's a high probability of acceptance of lower pricing and perhaps even directional activity. So, I'm going to be peaked. I'm probably going to be a little anxious to try and catch something early today. but I'm thinking that the better opportunities may come when I'm patient. Of course, the opening range trade, that's a distinct possibility anytime we open outside of balance and outside of range. Look at gold. What's it doing? Well, I think we're kind of putting a potential bull flag here over the last 3 days. We've seen some pretty good open interest increases, which includes yesterday's increase of approximately 2,300 contracts. So we're seeing some blood come into this market. Now we're gonna see what direction that blood takes us. Not only do we have this bull flag, we have the potential for risk-off fears, but there is space in either direction in this market. We're in the middle, well, relatively centrally located in weekly kickoff high and weekly kickoff low. There's space down below to weekly kickoff low. There's definitely space up above to weekly kickoff low. I'm going to be looking for a move to one of those or the other if we can break out of this potential bull flag. It's not a bull flag until it breaks out above it. So, again, trying to be patient is going to be difficult, especially when prices are moving and active. All right. So yesterday, as I was doing my review at the end of the day, I put in this trend line across the top. I put in this trend line across the bottom, looking at this as a potential bull flag. So imagine my surprise when I get up this morning and we're already testing the high of the channel, and kind of taking my opportunity to look down here for a move to the upside away because it happened last night. We have maybe some overnight longs, long-ish, I'm going to call it. We've been both sides. We're currently above it, so there's probably some longs up here. The market opened. It left the opening range at the bottom of the session, at least for now. It's just kind of buying time here, and it's been buying time for 3 days. If there's momentum above this channel line here, then we go with it. If there's not, we fade it. We see if we can get a rotation back to the low of the channel. We just took a look in regular trading hours above that level. We did not yet mark acceptance up there. We didn't spend enough time. We didn't bring momentum. It came up here and failed. That's an upside failed auction, at least for now. But I'll be kind of focusing on this line here for opportunities today. And to the euro, downside structure certainly is remaining. We've had the big dive here, and we've been putting in lower highs, lower lows. We're putting in a lower low right now. It's kind of seeming a little bit stuck to the last week's low. We traded to it. We centered on it yesterday. We opened on it today. We've had a look to the downside. We've come back to it. A lot of this is going to, of course, be depending on the dollar strength and what traders do with the dollar, with the information about the FOMC, tapering off quantitative easing. So we've got our questions ahead of us. It's just important to remember to trade what we see. We have settlement up here. It's 117.18. Put that on your charts. I managed to put it on this one. That's last week's low. Okay, just kind of between price and settlement and the point of control. We do not have a gap. If we had a gap, we closed the gap pretty early. Now, it's a question of acceptance inside value from yesterday. We've got 4 30-minute bars that have peeked into it but have not yet found participation up there. There might be some fish here, ladies and gentlemen. There might be some fish here. And take a look at the 10-year here. So, overnight rate got hit a little bit. We had a little push to the upside. Still seems somewhat non-directional. Added 12,000 in open interest yesterday. In a non-directional move. We had 1-2 doji-like auctions that have failed in both directions from this level. we're looking higher. It still seems as though that this is short time frame controlled, even with the information out there, including the FOMC information. So the 30-minute chart gives us a little bit of a look at some potential opportunity here. We have the gap. We have overnight longs. Those overnight longs seem to be getting nervous and bailing out of those longs. When we have these weaker hands communities of traders that are all one direction, and the U.S. regular hours open up and don't perpetuate that move to the upside. This is often what happens. We did open with the gap. We are attempting to close the gap, but if we can't close the gap relatively early, then we go in the direction of the gap. It looks to me like yesterday and the day before's session highs could be interesting. I would be looking for some fish there, and I would also be looking for some fish down near a gap close. But I think the better opportunity may have already passed in the fact that this happened in the overnight, and we are seeing that this level has provided a degree of fish in the cooler. That's what our job is. We're fishing. We're stalking. We're patient. We're looking for the market to come to us and say, "Hey, look here." So Juan, I hope that was a decent kind of look at the YM for you. I didn't have the TPO chart up yet, and I want to make sure that I'm done before the equity open. Thank you, Fred, and thanks for everybody for being here and joining me. I'm really looking forward to having a good trading day for everyone, not just myself. It's our place here to provide you the opportunity for the success that you all looking for, and we're looking forward to that success. Today is Thursday. Dan would be back with you for the market recap today. We'll see how these markets played out. Hopefully they played out in your favor. I'll be back tomorrow morning for the market forecast on Friday, 8 o'clock. Same bat time, same bat channel. Trade well, everyone. Looking forward to hearing some good stories about your trading today. Get out there and profit. Trade well, everyone.